How to establish business credit. Business credit is credit under a company's employment identification number. It is not associated with the owner's social security number. Business credit and personal credit are separate. The scores can diverge dramatically. This credit is in the business's name and it is based on the business's ability to pay, not the business owner's. Since the business qualifies for the credit, when done right, business credit is obtained with no personal credit check required from the business owner. Plus, the business owner isn't personally liable for the credit the business obtains. There are numerous business credit benefits. Businesses have a much greater need for higher capacity than a consumer does. This is why approval limits are much higher on business accounts versus personal accounts. According to the SBA, credit limits on business cards are usually 10 to 100 times higher than consumer credit. When done correctly, business credit can be built without a personal credit check and without putting your social security number on an application. There are no inquiries on your report. Business credit can quickly be obtained regardless of personal credit quality. And there is no personal credit reporting of business accounts. Utilization won't affect your consumer FICO score. Why do you want to establish good business credit? All major businesses have business credit. Oprah Winfrey and Bill Gates don't put their personal assets on the line when their companies borrow money. And they don't need to provide a personal guarantee either. Why? Because their own businesses have credit. Establish a credit history before it's really needed. Credit history is one of the metrics CRAs use when calculating business credit score. The longer and better a credit history, the better a business's credit score is going to be. Start early, as it can only help you. Get the business ready for lean times. If you are in a seasonal business, then this is part and parcel of the company. But every business can have slow sales and other off times. If you have to cover expenses, you will need business credit to get by. Establishing business credit before you actually need it makes you far more likely to get better terms or even credit at all. Save personal credit for personal expenses. Using personal cards to pay business expenses will hurt utilization rate. Utilization rate equals the amount of credit used over the total available credit. This percentage should be 30% or less. Paying for business expenses with personal credit will make this nearly impossible. Separate business credit from personal. Create a barrier so personal assets can't be touched, even if the business goes into receivership. With an EIN, you have told the IRS that the business is legitimate and not just a hobby. So the IRS is already treating you and the small business separately when it comes to tax liability. So stop floating interest-free loans to the business using personal credit cards. Instead, pay yourself a salary like you would be paid if you were an employee, and use business credit to help cover expenses. Trade credit is extremely helpful. You should use it. Use starter credit for supplies you already need. This is items like coffee or shipping boxes. True starter vendors report to at least one of the CRAs, and they will often give net 30 terms without a credit pull. Business credit means you can eventually get bank loans for the company. If a business opportunity is just too good to pass up, you may need to act quickly, but you may not have that kind of cash on hand. Establishing business credit means bank loans will be granted more quickly and with better terms. This also includes loans from online lenders. Payment history matters. It affects a business credit score more profoundly than just about anything else. Pay all bills on time, in full, and you'll have good business credit. Establishing business credit early means you'll have that many more times and opportunities to establish a good payment history. Business credit is not built automatically. You have to actively work to establish business credit. However, it can be done easily and quickly, much faster than you establish consumer credit scores. Vendors are a large part of the process. Don't try to do the steps out of order. You will be turned down repeatedly. You cannot start at the top with business credit. However, we know the steps you can take, and we know the order in which you need to take them. Establishing business credit. Step 1. Legitimacy. Establishing professional credibility makes a real difference. A business must be legitimate to lenders and vendors. This means a professional-looking website and email address. Plus, the business phone and fax numbers should be listed on 411.com. Also, the business phone number should be toll-free, 800 exchange or comparable. You are also going to need a bank account devoted strictly to the business. Make sure you have all of the licenses needed for running the business. These licenses all must be in the exact correct name of the business, with the same business address and phone numbers. Establishing business credit. Step 2. Working with the IRS. Get a free employment identification number for the business. Select a business entity such as a corporation, LLC, etc. You can start off as a sole proprietor, but will most likely want to change to a type of corporation or partnership to minimize risk and maximize tax benefits. At the very least, go with a DBA. If you do not go with a DBA for the business, then your personal name is the same as the company name. Hence, you can end up being personally liable for all business debts. The IRS says, with this structure, you have a 1 in 7 chance of an IRS audit. There is only a 1 in 50 chance for incorporated businesses. Avoid confusion and significantly lower the chances of an IRS audit at the same time. Establishing business credit. Step 3. Get the credit reporting process started. Go to D&B's website and look for the business. Can't find it? Then get a free DUNS number or a DUNS number. A DUNS number is how D&B gets the company into their system to generate a Paydex score. With no DUNS number, there is no record and no Paydex score. Once the company is in D&B's system, search Equifax and Experian sites for the business. You can do this at www.creditsuite.com/reports. If there is a record with them, check it for accuracy and completeness. When you start to get credit from places which report to Experian, and then they will have something to report on. Establishing business credit. Step 4. Starter vendors. Start with trade credit or trade lines. These are also called starter vendors. They are often net 30-day terms for the things you buy all the time, like coffee and shipping boxes. Not every vendor can help you like true starter credit can. You want vendors that will approve you with minimal effort. You also want them to be reporting to one or more of the CRAs, Dun & Bradstreet, Equifax, and or Experian. This is true starter credit. You will need to have 5 or more of those to move on to the next step, but 8 is preferable. You might have to apply more than once to these vendors, and you may need to buy some things you don't need. Consider donating unwanted items to charity. Some of our favorite true starter vendors are Quill Office Supplies, Granger Industrial Supply, and Uline Shipping Supplies. Even starter vendors will want you to have a DUNS number, so be sure to order it early as it can take some time. Sometimes starter vendors will want trade references or bank references. You may need to try a few times before you are approved for credit terms. Establishing business credit. Bonus. Trade references. Vendors which do not report would seem to be a waste of time, but they don't have to be. You can always ask for a trade reference. Trade references provide a picture to future lenders. It goes beyond the numbers. Establishing business credit. Step 5. Business credit monitoring. Know what is happening. Make sure it is being reported. Address all errors as soon as possible. Get in the habit of checking credit reports. Start digging into the details, not just the scores. We can help you monitor business credit at Experian and D&B for only $24 a month at www.creditsuite.com/business-credit-monitoring. For D&B, go to www.dnb.com/credit-builder. For Equifax, go to www.equifax.com/business-credit-monitor-small-business. For Experian, go to www.smartbusinessreports.com/landing/1217. Experian and Equifax cost $19.99. D&B ranges from $49.99 to $99.99. Update the information if there are errors or anything is incomplete. Establishing business credit. Step 6. Revolving store credit. With 5 to 8 vendor trade accounts reporting to at least one of the CRAs, you can then move on to revolving store credit. These will be companies like Staples and Office Depot. Use the company EIN on these credit applications. Amazon can be helpful. They report to all 3 CRAs. They will check business legitimacy by looking at listings. To get out of providing a personal guarantee, show at least 3 years' time in business. Establishing business credit. Step 8. Fleet credit. You need 8 to 10 accounts reporting. These will be companies like Conoco and BP. Use this credit to buy, repair, and maintain vehicles. Apply using the business EIN. Establishing business credit. Step 8. Cash credit. The next step is cash credit. A history of handling business credit responsibly pays off here. These are companies like MasterCard and Visa. Keep your Social Security number off these applications. Use an EIN instead. You usually need to have 14 or more accounts reporting to get cash credit. There can be time and business requirements. There can also be minimum paydex score requirements. Establishing business credit. Bonus. Unsecured business financing. Unsecured business financing can be a great solution. These report to the business CRAs, not the personal CRAs. You don't need proof of cash flow or collateral. You don't need to fulfill a time and business requirement. With unsecured business financing, you only pay on what you owe, not like a loan. There is often a 0% introductory rate, usually 6 to 18 months, and these are ideal for startups and for high-risk industries. With UBF, the lending source works on your behalf to get credit cards for you. Most of the time, their tactics to get you credit result in much more than you could get by yourself. This is because they are going for multiple cards for you. Often they can get 5 times what you could get without them. Generally, you will get 5 to 8 cards with UBF. The lender can also get low introductory rates, typically 0% for 6 to 18 months. Pay normal rates afterwards, usually 5 to 21% APR, with 20 to 25% APR for cash advances. They also get you the best cards for points, meaning you get the best rewards. With UBF, you get credit without any security, assets, or collateral. The lender has no collateral to collect in case of default. They don't look or care about cash flow. All that matters is personal credit. With a 650, you'll only get personal cards. With a 680 credit score, you get both business and personal cards. You need quality credit with no derogatory items on your report. This means no bankruptcies ever on the report. You might get approved with bankruptcy if it is not on the report. No credit counseling. Any judgments and tax liens must be paid off. It also means no active outstanding collections and unpaid status. Less than $500 might be okay. No late payments in the last 12 months. No foreclosures or late mortgage payments. At least one bank card with a 3-year history or $3,000 limit. If there is no car loan or mortgage, then you'll need 2 bank cards. You can use a guarantor or credit partner to up the numbers. Often these people want a piece of the business in exchange for the help. Consider the creditor's perspective. They want to know you'll pay them back. Most sources will charge 9 to 12% in success-based fees. Only pay the fee off what you secure. Pay an average of 10% on the amount borrowed. All lenders on all loan programs charge fees. You easily pay 5% plus even on an SBA loan. This program, like most others including SBA, will roll in the fee, so you don't pay up front. Balance limit ratios on existing revolving accounts matter. The lower the ratio, the higher the approval amount will be. A 30% ratio is required. This looks at overall percentage and individual percentage on each account. Credit inquiries are a big factor tying into approval. More than 6 inquiries in 6 months is too much. Business credit means personal credit is untouched. The utilization rate stays low. You don't get inquiries on personal credit. Establishing business credit before you need makes it easier and faster to get it. Payment history and credit history matter. Establish business credit the right way. Set up and bolster business legitimacy. Get a DUNS number, an EIN, and set the business entity up with the IRS. Start with vendor credit. Move on to revolving store credit. Move to fleet credit and cash credit. Or use unsecured business credit. Contact us today to learn more about how to establish business credit.